Welcome back to National Report. I'll show you a live look now at the Dow, again down here, 650 points and falling. Joining us now is Doug Flynn. He's a certified financial planner and co-founder of Flynn, Zito Capital Management. I wanted to bring you right in on this as the markets opened some 23 minutes ago. What do you make of what's happening now here on Wall Street, Doug?
Well, it looks like we really are in a bear market rally. If you look at them historically, the average bear market goes down about 36%, which we've done. And the typical rally is about 14% on average off the bottom. And around today, we're going to be right about there. We went up a little higher than that. That's why it's an average. But it seems like that's the very normal occurrence of the market just trying to find a bottom as we digest all this big negative news that's going to continue to be here for a couple more weeks, it seems.
We're also looking for those jobless claims to come out. I believe it's tomorrow. How would this affect the markets as well? I imagine we're going to see some even higher numbers here.
Yeah, it sure seems so. I think that the market has priced in a recession. Whether we get one or not officially, who knows? But, we're acting like we're going to be in one. There's a lot of things that are shut down and on pause. So I think it's just going to further be more negative news. But quite honestly, we're expecting a lot of negative news now. So perhaps that's the point. With a lot of a negative news expectation, it has to be something ridiculous for us to really shock the market other than just this normal occurrence that we're having right now. But we do expect it to be pretty negative. All the numbers are going to be pretty negative for the next couple of weeks. There's no question about it.
Absolutely. I mean, social distancing is going to stay in effect until April 30th. The thing is, there's uncertainty, right? We don't have an exact date. We just know this is when it's going to be reassessed. It could go on and on and on. Talking about that, Wall Street wrapped up its worst quarter of performance since the 2008 financial crisis. The president again extending it, the social distancing guidelines. What do we expect for next quarter, Doug?
Yes, you're right. The market actually had the worst quarter in its history, and it was the worst March since the Great Depression. There were only 3 individual months worse than March as a percentage since the Depression. Fortunately, a year later on all of those, the market was positive. But you have to expect an extremely negative GDP number. We have to digest that. We expect it. Goldman Sachs is calling for a 34% drop in GDP. Now, remember, that's annualized. But nevertheless, there's some extreme numbers coming that are going to be historically larger than we're ever used to before we get on the other side of this. It is quite honestly possible that at the end of the year, what goes down so fast can snap back up so fast as everything comes back online. You're starting to see some of that in China, some of the manufacturing, everything is getting back online. We're a couple of months behind them, and so we suspect that will happen towards the end of the year, hopefully.
Yeah, a lot of people are hoping because bills are due. They're due today. It's the first of the month. Millions of people are out of work. Businesses are shut down due to the virus. But when is enough? Because if this continues to go on, I mean, how long can our economy last at this era? And I just want to point out, again, we want to save lives here. But when we do save these lives, what do they come out to at the end of the tunnel?
That's an excellent question, and we're always, of course, that's first and foremost, trying to save as many lives as possible. And then once we do that, you have to say, yes, you're right. What are we coming back to? And the problem is, the longer this goes on, the further decay you have. So initially, maybe we get 95% of everything back. But if it goes another month, maybe it's now 90%. And then every month we go, the smaller percentage of companies are going to be able to make it and come back. And so that's really the thing. You have to balance, of course, all of these things, and the sooner we can come online safely, the better we'll come back. But quite honestly, there are a lot of companies that were well suited. They had stockpiled cash. They're in good shape. There's a lot of companies that are hiring while others are not. And I think what this does is just speeds up the process of these companies that were not as strong as they might or should have been. So we'll see, but hopefully it isn't going to be that long.
All right. When is the exact time we would officially know, hey, we're in a recession? I've asked you this before, and you mentioned that you got to go through a couple of quarters, right? Kind of elaborate on that.
Yeah, so what happens is the quarter that just ended, we're not going to have a negative number. All of this impact is going to happen in this quarter, which we won't see until July is really what happens. Technically, the textbook definition is 2 negative GDP quarters. It remains to be seen whether officially we have both this upcoming quarter, which we clearly expect to be negative, and the next one, whether or not that's going to be negative. So it's semantics. semantics, to be honest with you, because if you have this major negative and it's the largest negative we may have ever had, technically, by textbook, we're not in a recession, but it sure acts and looks like a recession. And so that's what happens. One thing I'll note is if you look at the Asian flu of 1957 to 1958, that to me is the closest one to this.
Doug, hold on one second, buddy. We ran out of time. Sure. I want to get back to you in just a bit. But again, that's Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. See you in just a bit.